Good day, everyone. Well, when we look back centuries, there was no separation of church and state. And given where the world sits, separation of money and state is now undergoing intense scrutiny. While Web3's use case is freedom to communicate, Bitcoin's use case is freedom to transact, and Bitcoin separates money and state. You can't create more Bitcoin beyond what is allowed by its code, which has never been violated. And Bitcoin is a store of wealth, not in the absolute sense of being stable, but in the decentralized sense that it is governed by code that no one can break. No central bank can manipulate how many Bitcoin are in circulation. Unlike central bank controlled fiat, it can't be inflated away. So traditional fiat has and always will be devalued by central banks. It's only a matter of time before the Fed moves from QE light to full-blown QE, which is spurred by another crisis. And that's why crypto, which acts as fuel for the metaverse, is so important. Crypto is the counterbalance to government control over our money. Bitcoin is the Magna Carta of code. There are no constitutional rights without the freedom to transact, and without the freedom to communicate or transact value, all other freedoms collapse. Decentralization of existing platforms is the way forward as it quashes censorship and cancellation of a user. CBDCs are an intentional effort to revoke this freedom under the guise of convenience. The Canadian government's response to the truckers' protests nicely illustrates this when they froze the bank accounts of those who tried to help the truckers. Ultimately, it's good when the citadels of truth and benevolence coincide. The Web3 metaverse ensures that. Web3 is composable, meaning anyone can build on anyone's creation. And this spurs exponential growth across decentralized autonomous organizations, also known as the DAOs, some of which will become hyperstructures, such as Uniswap, where no central authority can stop its growth. And that's akin to P2P file sharing that underwent mass adoption with the launch of Napster in the mid-1990s. Governments tried to shut off all the front ends, such as Pirates Bay file exchange sites, but for every Pirates Bay shut down, 10 new ones sprung up like mushrooms. And in consequence, the number of users mushroomed from a couple million back then to over 100 million over the next 10 years. Fair platforms such as Netflix and iTunes have legitimately attracted such users away from illegal file sharing. So I would hope we learned that strong arming users into not violating copyright law had little effect compared to the launch of economically fair platforms where users could legitimately watch or buy product. But while the bear market remains in force, the best technologies such as DeFi's Uniswap and Metaverse and gaming platforms such as Decentraland and Sandbox will likely correct further before finding their major lows if history of prior bear markets in cryptos is any guide. Now, over in stocks, well, I would say that both stocks and crypto markets remain in major overall downtrends. The meeting minutes are going to be released today at 2 p.m. Eastern. And some Fed members have suggested higher terminal rates, though one was suggesting, or I don't think he was a Fed member, but one suggested that should December CPI and PPI come in again below expectations, the Fed could end up pausing rates after December due to the growing number of delinquencies, also the onerous amount of interest rate payments on the still massive amount of debt, and the improvement on the supply side part of the inflation equation due to healing supply chains. While many assume this means a major low for stocks and crypto, the massive QE bubble still needs to be unwound. But the likelihood of a pause in hikes still remains very low because the Fed, they've got to remain hawkish because inflation is still too high and well above the Fed's target 2%. We see the Dow, and we saw this in 2000 to 2002, the Dow is the strongest performing index because it is a kind of the more risk-off index compared to, say, the NASDAQ. And you can see this in the form of the weekly charts. The Dow is not very far off its high, but the NASDAQ certainly, and the S&P, NASDAQ is performing the worst. It's below its 200-day, and the S&P is struggling around its 200-day. So both of these are higher risk, and therefore they are chopping lower It looks to me like we're going to see another dead bat bounce take place. Perhaps the meeting minutes will be the trigger. And then, of course, we have the Fed meeting coming up. I think that it will be after the CPI reports, so they can base their decision. So while inflation is moderating, I think the projections take that into account. And will it moderate faster than people think? Well, that remains to be seen. There's still indications. I think real estate home prices hit a new high. A lot of these indicators are delayed. So the CPI may still stubbornly stay higher as a consequence of that. And that, of course, will force the Fed's hand to continue to hike. Right now, the CME Fed futures predicts 50 basis points in December, and then another 50, and then 25. And if all three are able to be manifested by the Fed without completely unsettling markets, then we're going to look at a Fed funds rate of 500 to 525 by and that's where that would be the terminal rate, according to what the predictions are at present. Gil, how are you seeing everything?
I think the Dow is double topping here. So this has been the leading index. Like we were talking about earlier, this is more of a defensive rotation. It has the odor of what Bill O'Neill used to tell me would be a Dow prop. So money flows into the Dow. I mean, I don't know if it's a conspiracy to prop the Dow and make the market look better than it really is under the surface, but money is moving that way. And as Chris said, it's more of a risk-off area of the market because you have these big, long-time established companies that to some extent become, alternative, maybe not necessarily alternative currencies per se, but alternative assets in terms of they'll be there. Whereas a lot of these unicorn stocks, a lot of these crypto shit coins are all disappearing. At least you know that, theoretically, you'll know that Caterpillar will still be around. Boeing will probably still be around, even though they're a pretty, corrupt company, I think, at this point. But, that's the viewpoint. That's why money flows there. And I think that's why you're seeing this relative outperformance in the Dow versus the NASDAQ, obviously, which is barely up off the lows, and versus the S&P, which is still below its 200-day moving average, while the Dow pushes higher. So how could you play this rally? Well, the easy way would be to just simply buy Dow stocks. But, this requires, in my view, an ability to just, buy and figure out that money is just flowing here and it doesn't care. Fundamentals become moot, because the money's out there. It's coming out of big cap tech. Because you don't see names like Microsoft, Apple, Google, Amazon, Netflix, Tesla, Intel, etc., shooting higher in the same manner as you're seeing a lot of these Dow stocks. So if I look at, I'm going to use MarketSmith here, and hopefully you can see this chart. But we look at if I sort these by relative strength rating, so we're going to look at the highest relative strength names first. You can see what's going on here. I mean, you got Amgen running like mad. It's a 15% earnings grower with negative 1% sales growth. Chevron, the oils have been better, obviously. There's actually some real numbers there, some real earnings and sales growth. Okay, so you got one. Merck, 6% earnings growth, selling at 14 times trailing 12. You don't really see any big growth for the estimates going forward. Caterpillar, there's some big numbers. So I find it interesting that Caterpillar reported big numbers when they reported earnings three and a half weeks ago. Today, Deere was going nuts, or is going nuts, after they reported pretty strong earnings, up 81%, which is interesting. And I'm wondering if we're going into a recession, you might think that these are going to see a slowdown in business, but they're not, at least not right now. But we'll see how these moves play out. It's still pretty early, at least for Deere. And CAT has already run up, back up. If you look at the weekly chart here, it's approaching its prior highs. So, this could simply be pushing into double top land, just like the Dow. IBM, they're minus 2%, but again, pushing back up towards prior highs, just like the Dow. So you can see that the Dow's movement is embodied in the charts of a lot of these names. Honeywell's another one, pushing higher, 11% earnings growth, big deal. Walmart pushing higher, big gap up because they beat earnings estimates the other day. That was last week, I believe. Up 3%. Okay, and they've got a trailing 12 PE of 25. Goldman Sachs minus 45% earnings contraction, selling at 10 times earnings, and they're pushing higher. If we look at the weekly chart, you can see that they're pushing towards double top land. But if you're a can slim fundamentalist, there's nothing really here, to sink your teeth into necessarily. Travelers is one of the leaders, but you notice now that the RS ratings will start to come down. But this still is 89, so they're coming off from the 90s now as we move down the list. But you still minus 15% earnings contraction. Minus 3% for McDonald's. I don't know really why this is up there, but it is. Boeing losing money, losing $6.18. So now they're going to lose money this year to the tune of minus $7.83. Next year, they're going to make $3.61, according to Market Smith data here that I'm showing you. And that means then they're selling somewhere, I think, around 48 times forward earnings would be 2023 earnings. So that's a pretty good P expansion for a company that is showing a market slowdown in earnings. So, very interesting action here. Johnson & Johnson minus 2% growth, but pushing back to the highs. United Health, a little better numbers there, 28%. But still, none of these fit can slim other than we see Deere and Cat and maybe one other, Chevron, I think. But even this doesn't because sales are only up 12%. JP Morgan, 11% earnings growth. And pushing back up towards basically a 50% retracement from the lows of the bear market decline. Visa, 19% earnings growth, 90% sales growth, maybe a little bit better, but still, what is it doing really? It's just chopping around. And you can see on the weekly chart here that it's just very choppy. There's really, you got a downward trend line here, declining tops trend line along the top of this. Is this turning around and going higher? I don't know, 11% earnings growth in 2023, and you have a trailing 12 PE of 28. Okay, so you get a sense pretty quickly that there's really not a fundamental basis for the group move in Dow stocks. It is, as we said, and as Chris pointed out, it's basically a risk-off type of move. Money wants to be in the market because the indexes are going up, because the market is thinking that the Fed is going to pivot soon enough. And you actually saw the indexes reacted very sharply this morning to the IHS market PMIs. You had the service PMI, which continued to contract below 50. And then for the first time, you had the manufacturing PMI contract below 50. So whoopee, let's celebrate. We're going into a recession. And that's basically what happens. It's the upside down world of a QE dependent market, and that's basically what you have. Home Depot, 8% sales growth. We have one locally that I go to, and it seems pretty quiet these days. I don't really, there isn't really much going on there either in terms of earnings growth. Coca-Cola up 6%. Walgreens, Boodalines, minus 32% earnings contraction. Cisco, a 5% grower in the last quarter. But look at what that does. It's taking you up towards this 50 level, which could turn out to be a double top zone here. Procter & Gamble, minus 2% earnings growth. Apple, 4% earnings growth. But notice it's not moving much because it's big tech, and money has been coming out of big tech. So it's like a rotation. But is it an absolute growth-oriented rotation, or is it a defensive rotation? Well, as we're going through these names, I think it becomes apparent that it's probably a defensive rotation. In anticipation of what? I don't know. Dow, let's go back. That's minus 60%, okay? 3M, 4% earnings growth, sales declining by 4%. But still, they get it rallying off the lows, and Microsoft 4%, but not much off the lows like Apple because money's coming out of tech. Nike minus 20%, Verizon minus 7, Salesforce minus 20, Disney minus 19, Intel minus 59%. So these are all earnings contractions, okay? And there are more names with either less than, say, 10% earnings growth and or earnings contractions than there are stocks that are showing big, stronger upside earnings of, let's say, 20% or more. I think there's only 4 names among this entire group. And that's very interesting. So it's telling you it's basically a QE type push into this area of the market. And, unless you're going to buy into these things on the basis of, I suppose, technical movement, then there's really nothing to play here. If we look at some other areas of the market, I've favored the commodity space, because my thinking has been this. If we see the dollar decline and continue to decline, so right now, it's moving lower. So you want to know what's pushing the market higher? Well, the dollar is going lower today, and it's going to test the lows of last week, maybe heads for the 200-day line. But that confirms, to some extent, the Fed pivot argument. And basically, I think you should watch this closely, because remember that the market figured out long ago, well before the Fed, that interest rates had to start rising. So it started raising rates last year, and then the Fed didn't come on until early this year, and they finally started to move aggressively. So, the market will know before the Fed. So you do have to be alert to this and fluid with this, because there may be opportunities that show up in areas you may not be expecting, and also not in traditional ways. And I'll show you some of that in a second here. But you got that. You also have the TNX. Okay, it's coming in and looks like it wants to roll lower, but it is holding last week's lows. So we'll see how this plays out. But I think you got to keep all of this in mind, maintain awareness. And precious metals, you have gold and silver coming up off the lows and consolidating normally. So we picked off the UNR in gold about 3 weeks ago. We put out an alert on that. Also silver. Of course, we prefer the Sprott vehicles, but now silver, running into resistance along the 200-day line. So we'll see what happens. When I look at miners and other commodity names, I'm just going to run through this list. You can see Alcoa trying to set up, and I'm seeing better color here. This isn't really, just because you see good color here doesn't mean you just pile in. You want to see it coincident with other constructive features on the chart. You get a nice pullback here on Monday. It bounced off the 20-day line. So some of these names, I'll sit back and look for pullbacks into the 10 or the 20. The 20-day line becomes my favorite, or is my favorite moving average for opportunistic pullbacks. First Majestic, you see on Monday and even last Thursday and Friday, pulling into the 20-day line. First Majestic Silver. Agco, pulling down into the 20 last week. Now it's breaking out to higher highs on strong volume. Albemarle pulls into the 50-day line. Now, this is pretty typical, I think, in this market. You get a breakout, it fails. So at this point, it's starting to hint at becoming a late-stage failed base. And you'll notice today we have a rally into the 20-day line. Is that potentially a short entry spot? It's possible. Something I might keep an eye on here. Arch Resources, the calls have been moving up. Anglo Gold, a couple of weeks ago when we saw gold and silver run, right after we put them on as undercut and rally setups, a straight price UNR for gold and a moving average undercut and rally for silver. These names all shot higher, and so you're seeing these gold miners running up. But, a strong day yesterday, a pocket pivot move off the 10-day line, but that's extended. I think it needs probably to set up, but, that's giving you some clue as well that the market is leaning towards some kind of a Fed pivot. Now, if we start seeing all these names fail, then that might be telling you something, along with the rise in the dollar and interest rates. But for now, these have had a run up off the lows, and if we look at them on a longer term basis, it's really not that much. You're along these highs on the left side, so this may be a resistance point. I think you had to be buying them a lot lower if you wanted to play them. And feel free to ask any questions if you had any. You have Bungie, which is an agricultural name. It's hanging along the 200-day line. Is it a double top, or does it want to break out from a cup with handle? You have volume drying up by minus 58.5%. Intraday, it's hanging right at the 200-day line, I believe. Let's see, the 200-day line is 101.34. We're trading right now 101.35. So, yep. Peabody Energy, that might be a double top. That's a coal name. Camco, to me, this is just basing down here. I don't know if it's going to end up rolling lower or whether it's going to set up and try to push higher. Obviously, a clean move up through the 200-day line would be what you'd be looking for to at least help confirm that. Century Aluminum is just like Alcoa, supported the 200-day line on Monday. CF Industries, a fertilizer name, but really all it's doing is chopping back and forth within a range that extends back to early September. And so you break down and you undercut, and then you run back to the highs. I mean, is there a trend here? No. Oil stocks are moving around with the price of oil. Cleveland Cliffs actually posted the pocket pivot on Monday on an outside reversal to the upside along the 50-day line. You also have the 10-day and the 20-day in there, and it's hanging in there. So maybe this is one that tries to come around if we get a Fed pivot, more confirmation of a Fed pivot. And again, a lot of these names are percolating up off their lows. So it doesn't necessarily mean that you have to rush into them now. I think if you can catch some pullbacks, and you might get some good, swing trades in the process, but it's not clear necessarily that everything is ready for a massive upside move. Corteva is another one that's broken out, an ag name, but it's kind of, floundering along the 20-day line. Volume's drying up pretty good today, though. But then it is the day before Thanksgiving, so we would expect volume to be drying up as the day wears on. But then you have the Fed minutes out. There's Deere running. So that's another name on my commodity list. Freeport McMoran, a pullback towards the 20-day line on Monday. That was a long entry. Now we're back above the 200-day line. But you can see how, this is, these names are trying to turn here. And it's one area I would just keep an eye on and monitor for potential long setups. Now here, what do you have? You're trying to push back above the 50-day line. It's kind of a little bit of a shakeout, not a big one. Took a few days, so it's a slow motion shakeout along the 50-day line. So nothing really here, but some of these might move. Livin actually had an undercut and rally last week along this low, and it tested it once, and now it's just moving up towards the 50-day line and the other moving averages on light volume. Mosaic, another fertilizer. MP Materials is a rare earth metals name. But again, just chopping around, and the way to buy any of these, if you want to buy them, is to buy them on weakness. So you get this pullback on Monday with the group, Nucor pushing to new highs. But, in this market, breakouts are a little bit too obvious, and they tend to fail, as we saw with Albemarle, for example. So now you're up. I think the place to be buying this probably was down here along the 200-day line on the pullback, because I think you did get a voodoo-like pullback here. And that would have been, let me just check this real quick. Volume level was minus 28.7% that day. So a little bit of a dry up on the pullback here at the 200-day line. Nutrien, another fertilizer trying to come up, but not really getting there. Peabody Energy, again, we talked about that. And Piedmont, is it rallying to the 50-day where it's going to be a short, or are you trying to pull off an undercut and rally through that low? I suppose you could test it either way depending on how it plays out from here, but right now you have an undercut and rally in force, so you might go with that. Reliance Steel, this is broken out, and you can see that there you are, but it's extended. So I think in this position you got to watch out for a possible double top and a failed breakout more than chasing the breakout. Sigma Lithium is another lithium name, pushing into the 50-day line. Volume is 2.4% above average for this time of the day. So is this going to play out as a short in here, or is it going to try and turn back up through the line? Keep an eye on this then, along with the other lithium names, which would be Albemarle, ALB, Livent, LTHM, Lithium Americas, LAC, and Piedmont Lithium, excuse me, PLL, Peter Larry. Sprott Physical Gold, there we go, just hanging out. Silver, now it's showing resistance. This one's showing resistance at the 10-day line here. But again, support at the 20, and it had a sharp move off the lows. It's got to consolidate for a little bit, so we'll see where it goes. Steel Dynamics is another steel name, breaking out to new highs. Kind of interesting if we're supposedly going into a recession. But to me, you're extended, so I'd just be watching this for either a pullback if you want to buy it, and any possible failure that might turn it into a short sale target on the double top. Tronox just trying to come off the lows. So that's, commodities. And you look at some other names, we've looked at the Dow names, industrials, air products and chemicals. I passed by this company on the way to my favorite restaurant in Manhattan Beach, California, which is where I live. Anyways, you got to see the big move yesterday after earnings, and you wonder what's going on here. But some of the rails are trying to move, but you see CSX pushing into the 200-day line. So, you're in positions where you do see resistance in a lot of the stocks. Also, extended moves are moving up into double top land with some of the Dow names, or probably more than just some, as I showed you before. And that's basically what is driving this market, So, but we're running out of, it seems like it's starting to run out of gas, but we'll find out. I mean, right now you got, semiconductors. Here's AMD. Is that a little double top, or what is that? Analog moving higher yesterday after earnings. Is it stalling up here? It looks like it. And so on. These have all moved higher and come off their lows. But when you look at things, in the grand scheme of things, even KLA 10 core, which looks like it's breaking out, but it really isn't. It's actually pushing into a double top position. Lam Research pushing into the 200-day line where it ran into resistance last week. Momentum is just garbage. Marvell, okay, what's that doing? It's trying to come up off the lows. So you can see there's really nothing roaringly bullish. And Chris, you can chime in on this, but based on my experience of what a bull market looks like when it starts up, this isn't a bull market. This is something else, and so you can't really play it in a trending manner the way you might your typical grandfather's bull market. So I think that's one of the main issues. You've got to be a little bit creative. And for my money, I thought playing the golds and the precious metals 3 weeks ago ahead of the CPI when they showed those long entry signals. A lot of those were good for big moves, and so in my book, that was good enough for now. So do I need?
Yeah, I was gonna
go ahead.
Gonna just say the markets are still in an overall downtrend. So we get these bounces that then roll over again, which is pretty typical for bear market environments. And the only reason we're seeing the current bounce is because there's hope that the Fed will start to think about pausing rates, and that's based on the favorable CPI and PPI reports that came out last month. And so I think all eyes are on those reports for the coming months, because that will obviously weigh into what the Fed decides to do. Ultimately, they're going to have to keep hiking because inflation is just way too high. It's nowhere near their 2% target. And it's possible that they're going to raise their new normal target from 2% to maybe 3%, or Ray Dalio suggests even 4%. It's just because it'll then give them a legitimate reason to halt rate hikes and maybe start to lower rates once again, because M2 money supply never materially decreases once debt is this extreme. I think the tipping point is something like 77% debt to GDP ratio, and the U.S. is way past that. I think we're at 115, 120%.
Yeah.
So are a lot of other countries as well. So I don't think that it's just a matter of time before the Fed starts to print again, and that could be spurred by a crisis of unknown proportion. If we don't get a huge crisis, then I think we get this kind of money printing QE light, where they print money to service the onerous debt, and meanwhile they continue to raise rates. So you're kind of twisting the market in both directions, and that can probably persist for some time. Even if the Fed halts the rate hikes, they're still sitting on a pile of debt that they have to service. So I just don't see QE light coming to an end. It's just a question of QE light versus full blown, say, what are we up to, QE 5?
Something like that. I mean, if you want to look at the broad market, the NYSE Composite, it's a good index to look at, but you still have, lower lows and lower highs. You're in a downtrend, and it's pretty obvious in the NASDAQ, you're in a downtrend. Okay. So anybody who's running around telling you we're in a confirmed uptrend, they've got their head up where the sun doesn't shine. And this is a much more complex market than just to label it as a confirmed uptrend or whatever it's whatever people need to sell you on in order to keep you as a subscriber. In any case, somebody's asking about the SMH. Yeah, SMH right into the 200-day line. Boom, there you go. And so how would you play this? Well, and you notice I was looking at a lot of the semis. Some of them look a little double toppy. Some of them, as in the case of, say, LRCX, is pushing back into the 200-day line like the SMH. So what would you go long here? The easy thing to do is to go with that SOXS. And you've had, it's down along the lows, just like the SMH is up near the highs. But if what you want to do is keep an eye on this. If this maintains resistance at the 200-day line, then that's a very good, I think it's a reasonable short sale target using the SOXS and relying on the fact that semiconductors tend to move together. So anyways, what else? And a couple of other things I would just point out, that to make my points. You look at the big stock NASDAQ names. So I keep a list of 13 of the biggest big stock NASDAQ names, and there's not anything going on. So this, relative to the Dow names, most of unless it is a Dow name like Cisco, Apple is as well, but it's not really contributing. But Alphabet, Intel, Meta Platforms, Microsoft, Netflix, there's not a heck of a lot going on here, and certainly nothing that would lead you to conclude that we are in a bull market environment. You're in a Fed pivot rally, and the market's basically trying to price in or trying to revive itself on the basis that the Fed is suddenly going to come back in. I don't know if you can assume that, and I guess maybe like Chris is saying, the minutes will give us a better idea later today about that, but maybe not, because a lot of it's more forward thinking. And Mary Daly was out yesterday. She's the Fed president in San Francisco Fed, but she's a non-voting member, and she's typically one of the more dovish members, and so she's talking about how the market's trading like interest rates are at 6%. So, but what does that mean? If they're telling us that they're looking at a terminal point at 5 to 7%, then 6% is right in between. So the market's trading. If the market's trading like it's at 6%, then that's because it's discounting it. So, the market does not look in a rearview mirror. Mary Daly needs to understand that, which apparently just because you're a Fed president or Fed governor doesn't mean that you're all that smart, in my view, and that you understand the dynamics of how the market functions. So I think right now it's not looking at interest rates. It's not trading like interest rates are at 6% at all. I think it's trading like the Fed is going to start lowering interest rates, and that's why we've seen the TNX decline along with the dollar. So, I don't know what a lot of these Fed heads, they don't really strike me as being very smart. I think you guys should all read Danielle DiMartino Booth's book, Fed Up, and she tells you all about the Fed. They're all just a bunch of academics, and, they have patches on their elbows, on their coats, like professors. And why do professors have patches on their coats? Because they're always broke, right? But I don't know. I think Fed members are a little more wealthy than that, but the point being simply that they're very professor-like, and that they don't really know that much, because these idiots last year were telling you, even Janet Yellen telling you, that inflation was transitory, and they were so wrong. It's kind of like the videos I'm seeing of Jim Cramer lauding how great Sam Bankrupt fraud is, and also Elizabeth Holmes, who got sentenced this week to 11 years and 3 months, I believe it was, for fraud. But you should go watch those videos. They're actually hilarious at how this moron gushes over these people who are basically frauds. And but a lot of people up there, the Fed heads and everyone else, they don't really know what they're talking about. Anyways, that's my rant for today. You got a rant for us, Chris?
Yeah, and I kind of did that in a prior piece, just how wrong the Fed has gotten things, since all of Powell. It's just saying, oh, inflation is transitory, then it's not transitory, and then don't worry, everything will be fine. We won't be slowing down. The economy's robust, job growth, all this stuff. And then all of a sudden he goes super hawkish, and he's maintained that stance since. And he's more and more wrong over time, because I think he's programmed to paint as rosy a picture as possible, so the markets have more confidence. and that's what he tends to do with well, he can do it until he can't, and really, it's been in the last couple months, that he can no longer be shy about saying how hawkish he needs to be due to the inflation problem. I suppose in the minutes he'll talk about the moderation and all of this, but ultimately, even though CPI came in at 0.2%, 0.2% under expectations,
0.3 versus expectations of 0.5, I believe.
Right, and it's still really, really high. I mean, debt is out of control. Inflation's way too high, and these are, of course, the manipulated versions. The real numbers are double digits.
Right.
You just see it, like when you go to the shop and you get apples, or you get basic food, basic necessities have gone up way more than 8%. So, and this is global. This is a global problem. I don't think there's any place that hasn't been touched by soaring prices across the board, and used cars and real estate. And real estate came in at its peak price on the medium. Yeah, in the U.S.
Yeah.
So things are not looking good for what the Fed has to do next. I mean, they've got to force it. They've got to maintain their hawkish stance.
Okay, that was a reasonable rant. You could have ranted a little more forcefully. You didn't call anybody names, so you leave that to me. Anyways, just looking at a few things very quickly, you can see that we're talking about this sock sell. You actually did get a long entry signal at about 31.66. You're a little bit past that. Let's look at some other things. UVXY is another one possibly to keep an eye on. Had a long entry signal along the lows. Now the MACDs are testing. Whoops, too many Qs there. There we go. The SQQQ starting to turn there off the lows around 43.80. What about the SDOW? Because the Dow's coming in now, and it's kind of hanging out along the lows. Maybe it's going to turn. It's trying to turn on the MACD right now after flopping around the line over the past half hour. What else is there? TZA, the inverse Russell 2000. That's got a long entry signal coming in at about $30. And the SPXU, the S&P inverse ETF it's sitting right around where it posted a long entry signal down in here around 1485. So we're at 1491 right now. So anyways, we'll see how things play out after the Fed meeting, or not the Fed meeting, but the Fed minutes. Start to get all confused after a while, but I think it's possible. There's a reasonable chance that the market has run its course, and you're kind of getting into double top land. Definitely in the broader market, as NYSE Composite shows it, and then also in the Dow 30, which is essentially the risk off trade. Anyways, that's all I've got for now. You got anything else, Chris?
No, I think we're good over here. Let's see where things roll.
All right. Thanks for showing up, everyone. Have a great Thanksgiving, and we'll talk to you next week. Take care.
So long, everyone.